2025 compliance webinar series. For those of you who are new to us, we do these on about a quarterly basis. My name is Brad Stumpe. I'm a partner and the practice leader for financial institution compliance and loan review services here at Anders. I'll be joined today by Josh Labadie and Brenda Hall, who are both former bankers, specialize in deposit compliance and BSA, or these days, maybe I should say CFT, inside joke for those of you in the BSA world. And both of them have many years of experience in the industry. Before we get too far into this, I want to point out that you can download the slides from the chat if you'd like to have them handy during the webinar. And they were also provided with an email that we sent out earlier this morning. So if you have the slides from the email, they're the same as those in the chat. And they'll also be included with the post-webinar materials that will come out in a few days. So last year, we focused primarily on loan compliance and CRA in preparation for 1071 and CRA modernization. Now we're just kind of waiting to see what will ultimately happen to both of those rules. So with the upcoming Reg CC threshold changes, we thought this would be a good time to pivot from lending and CRA to a more deposit-centric topic. So hopefully you find today's session to be informative. We have over 200 registrants today, a little over 100 on now already. So wow, thank you all very much for that. That's a real good number for the first time doing something on the deposit side. But that does mean, though, that you're all muted and unfortunately won't be able to unmute to ask questions. But with that, Brenda will be in the Q&A. So please submit your questions through the Q&A feature. You'll see that at the top of your screen. Please do not submit questions through the chat. So Q&A, yes. Chat, no. Before we get started, I'll steal a little bit of Brenda's thunder. The first 6 questions that we usually get, maybe the first 60 questions that we usually get are, hey, will we have access to a recording of the webinar? And the answer to that is yes, you will. In the coming days, we'll send out a follow-up email that includes a link to the recording. And before we get too much into the course highlights, there are many of you with us today who are all too familiar with Brenda, Josh, and myself. But for those of you who are not, I'll make some quick introductions. I started my career with the FDIC as a compliance examiner back in the early 90s, when having dedicated compliance examiners was a brand new thing. Didn't even know what it was really when I applied for the job. But after a dozen or so years doing that, I joined Cummings Ristow, which was a boutique accounting firm that was dedicated to financial institutions to help meet the demand they were receiving for compliance services. And that was right about the time all the BSA rules coming out of the Patriot Act were taking effect. And then Cummings Ristow merged into Anders CPAs and became their financial institution practice in 2020. And we've been cruising along as one big happy family ever since. So I'll kick things off today, hand it over to Josh to discuss exception holds, and then I'll circle back and wrap up today's session. Josh began his career in banking, where he spent a little over a decade at a variety of institutions before joining us here at Anders about 4 years ago, and we're real lucky to have him. He's great. We're also fortunate to have Brenda, who will be answering your question today, and would probably wring my neck if I told you how many years of experience she has in banking, but just suffice it to say that it's longer than me. So she's served in a variety of roles at community banks, including as compliance officer, and has spent about 10 years or so with us during a couple of different stints. So the course highlights, this slide outlines what we'll be covering today. We'll begin with the updated thresholds and considerations surrounding them, but that surely won't take an hour. So we'll also discuss the various types of holds that you can place. Josh will dig into the exception holds and some common errors we see with them. So I think by the time we dip our toes into each of those topics, I'm throwing a couple polls where you'll have a chance to win some prizes. Good luck. We should go right at about an hour, maybe a little under. So, as with any regulation, you need to know how Reg CC defines certain terms so that we're all speaking the same language. We're not falling back on how a different reg defines a certain term, or possibly even falling back to a layman's definition of the term. And we'll just hit on a couple of definitions that are foundational to Reg CC and also to today's conversation. We're not going to get into every defined term, or that's all we would spend the hour doing. So first up are account and check, two pretty basic definitions. Let's start with how Reg CC defines an account. And this essentially falls back to any account that meets the definition of a transaction account under Regulation D, and that's D as in Delta. And we have the specific section of Reg D listed in the final bullet point of the left-hand column. The first four bullet points are specific examples that are listed in Reg CC. What you don't see here are savings accounts, MMDAs, any other type of time account. So the limits we'll discuss today regarding deposit holds do not apply to funds that are deposited into savings accounts, MMDAs, any other type of time account. Only those that are deposited into transaction accounts, so DDAs, NOWs, share draft accounts, and the like. So you don't need to give the funds availability disclosure in conjunction with non-transaction accounts. Now, that being said, we have seen some clients that have provided the funds availability disclosure with non-transaction accounts. If you've done that, it's probably wise to go ahead and follow the Reg CC availability rules since that's what you disclosed. But that's another conversation for another day. If that's you, though, and you want to have that conversation, feel free to be in touch with any of us. We're happy to discuss. Our contact information will be on a couple of slides at the end of the presentation. Another thing that you don't see in the definition of an account is the primarily for personal, family, or household use language that you see under many other compliance regs. Those availability rules apply to transaction accounts held by all types of depositors, be they personal, business, organizational, whatever. Um, One last thing on the definition of account. We're not going to get into substitute checks today, but do want to mention that deposits into savings accounts and other time accounts can fall under the purview of the substitute check provisions of Reg CC, but that's beyond the scope of what we're discussing today. Just wanted you to be aware if you're looking like, hey, substitute checks, that's in Reg CC. How do they define that? You look at this slide. Oh, transaction accounts, that doesn't matter. Yeah, they probably do for substitute checks. And it's probably also a good time to kind of caveat all these slides. They're bullets, snippets from the reg, from the guidance. They're not everything. They're not the truth, the whole truth, and nothing but the truth. I think they're pretty truthful, but they don't have everything in them. If you're really doing some research, be sure you go back to those source documents. So next up, check. What is a check as defined in Reg CC? We've listed 7 examples here that are straight out of the rule and includes the obvious one, those that are drawn on or payable through a bank. And I know we have some credit unions with us today. The definition of a bank in Reg CC includes credit unions, so we'll just use that one all-encompassing term the same way that the regulation does. After that, we get into several other examples, most of which deal with items that are drawn on some type of governmental entity. And there's nothing new there. I don't think any surprises there either. The last 2 definitions we'll cover here are banking day and business day. Now, there are various timing requirements throughout Reg CC that refer to the next banking day or X number of business days. So it's important to know the difference. Let's go out of order and do business day first, since the definition of a banking day refers to business days. A business day is pretty straightforward. It's essentially Monday through Friday, except federal holidays. And that's whether or not your institution observes that federal holiday. So if you happen to be open on, let's say Veterans Day, that's not a business day under Reg CC because the definition of a business day does not hinge on whether you're open for business. Since it's a federal holiday, it's not a business day. Banking day can be a little more subjective. It's a business day in which an office of the bank is open to the public for carrying on substantially all of its banking functions. And you'll see that type of language in several regs. This won't come into play very often, as I suspect that most, if not all, of your branches are open for business Monday through Friday, except some or all federal holidays. When this can come into play, and I haven't seen this for quite some time, but a certain branch, often a small rural branch, may not be open on a certain day, say Wednesdays. Then Wednesday would be a business day, but not a banking day for that branch. Another potential scenario that just kind of came to mind, and thankfully we haven't run into this with any of our clients to have to research, but maybe it's a natural disaster. Think hurricanes, wildfires, floods. Unfortunately here recently even tornadoes, where one or more branches might be closed for a period of time. Perhaps not positive, but maybe that would be something to think about being a business day, but not a banking day as well. So we've pretty much laid the groundwork and are now ready to jump into the new thresholds. The thresholds are adjusted every 5 years. They're based on the Consumer Price Index, and they're rounded to the nearest $25. So once we make it through this round of changes, we should be good to go until 2030. That's good news. The new thresholds were released back in May of 2024, so we've had some time to prepare for them, and then they must be implemented by July 1st of 2025. You're free to implement them sooner, but 7/1/25 is the deadline for doing so. And here the new thresholds are. You've probably seen several charts that look like this. I think the two numbers that will come into play most in your day-to-day life are $275, and that's the new minimum amount for next day availability, up from $225, and $6,725. Almost sounds like a Price is Right bid, but that'll come into play with several of the exception holds under section 229.13 that Josh will discuss here in a few minutes. So a couple of examples here. On a case-by-case hold, you'll need to make 275 available on the business day after the banking day, where those definitions come into play, that the funds were deposited. For a large deposit exception hold, you'll need to give next day availability to $275, second day availability to $6,450, and that's the $6,725 minus $275, and then the balance can be held until the hold expires. Working down the list, the increase in the cash withdrawal amount from 450 to 550 is one that I don't think we'll see come into play very often, unless you're extending holds by 1 day under 229.12, which we do not commonly see. And then the final two rolls on civil liability. Hopefully you never have to worry about those. But if, say, executive management, your board ask, what are the potential penalties? Well, from a civil liability perspective, here they are. Again, I think 275 and 6,725 are the two numbers that will come into play most often for the majority of you. On the next few slides, then, we'll walk through different areas where you'll want to be sure that these changes are addressed. First off, your new account disclosures. Here, just go through these disclosures, and anywhere that you see a dollar amount, be sure it's updated. There are no other changes to these disclosures. The time frames are not changing. It still needs to be in a form the customer can keep. If I'm opening up multiple transaction accounts, you only need to provide me with one disclosure, not one for each account. If I'm opening up a joint account with someone else, only one of us needs to receive the disclosure. None of that is changing, only the dollar amounts. But think about everywhere you might have a Reg CC disclosure or a reference to some of this information. Some of it might not have the dollar amounts and you're fine, but just give it some thought. There's the account opening disclosure we just talked about, your lobby posters, on your ATMs if they're deposit taking, online, what do you have out there? Deposit slips. I don't think that they're likely to have a dollar amount, but take a look and make sure. Um, any take one marketing brochures that might reference a dollar amount that's changing. There's probably more that I'm not thinking of off the top of my head, but you know, I'd go over these changes probably at your next compliance committee meeting, management meeting, whatever seems appropriate to you. So everyone can brainstorm, where might we have these numbers that need to be updated. Next up, how do you notify existing customers of this change? From a timing perspective, this must be done within 30 days after implementation, since it's expediting the availability of funds. The reg here does not state business or banking days, so we go with calendar days. You can do it before the changes are implemented, but you don't have to. You have until 30 days afterwards. A specific form for the disclosure is not required so long as it's clear and conspicuous. If you do send a complete new disclosure, then you must draw attention to the change terms. From discussions I've had with clients, I believe most are going with a statement message. If that's the route you plan to take, just be sure it's clear and conspicuous and that the statement will be received within 30 days after whatever date you decide to implement the change. One last interesting note about the notice to existing customers. The language in section 229.18E, and that's E as in echo, of Reg CC states that a notice regarding a change in policy must be sent to consumer accounts. And these are defined as those that are primarily for personal, family, or household purposes. I haven't heard of anyone yet who plans to limit the change in terms notice to consumer accounts. It's probably a good idea if you told your commercial customers, here's how we're going to do it, that you let them know, here's how we're going to do it now. But that is interesting wording in Reg CC, and it may help cut down on postage costs if you plan to do a separate mailer for that notice. All right, outside of your account opening and change in terms disclosures, what should you be thinking about? Look to the hold notices that you provide to customers, obviously. If there are any pre-printed dollar amounts, make sure they're updated. Get rid of those old notices at the right time. Look to your systems that generate hold notices and make sure they're updated correctly. Can you do any type of dry run on all types of holds that you place to make sure you're happy that the changes were comprehensive? Any scenario you can think of, run it through and see if you're happy with the results. Look to any of your policies and especially your procedures to make sure that any of these dollar amounts that are changing get updated. Look to your training materials to make sure they've been updated appropriately. There's no specific required staff training for this change, but Reg CC is one of those regs that does include a general requirement for employee training. So if examiners come in and find a problem with these updated thresholds, that might not just be a comment about your CMS, but could be written up as a violation of Reg CC as well. Again, brainstorm at your next compliance committee meeting, management meeting, whatever's appropriate for you. Where might some of these numbers be hidden that we need to be sure are updated? Excuse me, they're getting a dry throat. On the last couple of slides that we have here before our first poll, walk through the content requirements of the initial disclosure and makes reference to a couple of the model forms that we see many of these disclosures based on. You can find those model forms in Appendix C, C is in Charlie, to Reg CC, but don't use the dollar amounts in those model forms as they still reference $100 and $5,000. So they're now maybe 3 updates behind. Looking at the clock, I took a little longer than I was supposed to on my first portion. So we'll skim through these pretty quick since the only thing changing is the dollar amounts. And this is not a disclosure that we find many problems with or see written up during regulatory exams. And one thing I do want to mention is that this might be a good opportunity to review everything Reg CC, policies, procedures, disclosures, you name it, to make sure everything is consistent, compliant, reflects what you're actually doing, and maybe it might even be a good time to make any changes or updates that you've been thinking about. Well, on this slide, just be sure that you're accurately describing your practices regarding case by case and exception holds. Again, this is not an area that we see a lot of problems with, but since we're going to mention updating the disclosure, thought that we'd also include bullet points of the primary elements that must be included. The two takeaways again here are to update the amounts and review the remainder of the disclosure for consistency with the reg and with your actual practices. So on to our first poll. There's no requirement to participate in the polls. You won't get kicked off the webinar if you don't, but we would sure like for you to participate. And as an incentive to do so, we'll pick one name from those who do participate. Don't worry, your response will not be publicly available to the participants, but we'll pick one participant from each poll to win a Starbucks gift card. So if you like to pamper yourself with a shot of flavorful caffeine from time to time, or if you're like me and have a soft spot for their cake pops, be sure to participate for your chance to win. So since the next section that Josh will cover is exception holds, please respond with your most commonly placed exception hold. And we have a few options here for you to choose from. So it looks like large deposit is in the early lead. Reasonable cost doubt collectability. Probably new account is a distant second, and then reasonable cost doubt collectability. All right, we'll leave that open for just a bit longer to let everybody who wants to respond. During our reviews, probably the two most common that we see are the large deposit and reasonable cost doubt collectability holds. So thanks to everyone who participated. We'll announce the winner of the Starbucks gift card at the end of the webinar. Before I turn things over to Josh so that he can cover exception holds, I do want to mention the issue of check fraud. If memory serves, the most recent issue of the ABA Journal mentioned that check fraud has doubled since 2021, while the use of checks has declined by 25% during that same time period. With that, I know that a lot of you are placing more exception holds than you did a few years ago in an attempt to combat that fraud. The current rules that Josh will cover are not ideal for that, but they are a tool you can use. We've heard rumblings of potential changes to Reg CC to make it a more effective tool, but when, how, even if that happens, remains to be seen. In the meantime, be sure you're familiar with these holes so that you can use them to your advantage without overstepping the limits of the rule. So with that, I'll turn things over to Josh to cover exception holds. Then I'll rejoin at the next poll, discuss case by case holds, and wrap things up. Josh, it's all yours.
All righty. Thank you, Brad. So I wanted to start with a quick recap of the requirements of the exception hold notice you're giving to customers. And then after this, we'll give you a refresher on each of the different types of exception holds. And in case you've never actually labored reading through the reg itself under the Code of Federal Regulations, or if you're using like a third-party vendor for your forms and never thought much about it, Brad had mentioned Appendix C of Part 229, which provides those model disclosures for you to use. So if we can go to the next slide there. So Model C12 is the one you want for the exception hold notice, and we have listed here pretty straightforward what is required. Pretty self-explanatory. So time period can mean either the date the funds will be available or saying the X day after the day of deposit, which a lot of times we'll see both. Regarding this last bullet, saying you give the notice at time of deposit, that's pretty routine 99% of the time. Very rarely you'll have circumstances in which you don't become aware of certain facts until some number of days later. So usually this happens if it's something to do with down and collectability in light of new information, in which case you need to send the notice no later than the business day following when you became aware. You're deemed to have knowledge when the person responsible for making the determination learns the facts, or that person would have learned the facts if the institution had exercised due diligence. In some institutions, holds are reviewed by an operations type of department the following day. This is when we see holds being changed and new notices being mailed to the customer. And then some institutions will have staff that review large checks and decide to place holds after the deposit has been made. A few other little items not listed here. If the deposit is made up of multiple checks, you don't have to give a separate notice for each check. You can provide a total dollar amount when combined funds will be available and when. So, like for example, if the deposit is made up of two checks that are $50,000 each, you can combine those into one hold notice. This has $100,000, and then what funds will be available when. If the deposit is made in person, you'll usually want to give the whole notice to the person making the deposit, unless the deposit is being made by someone other than the account holder. Whereas if it's dropped, like in the night drop, deposited to the ATM, or mailed to you, you'll mail the notice to the actual customer on the account. Regarding timing of availability, you have a little wiggle room to extend availability beyond what the original notice said. So for any exception reason besides new account, you're allowed to extend the time by what the reg sort of unhelpfully calls a reasonable period of time in certain circumstances. So for example, if you place a hold and then you find out the check is going to be returned unpaid, you can either charge back the customer or extend the hold again and then send a second notice with the new date of availability. And then if the reason changed, then the reason. Probably rare, a power failure during the hold period that impacts operations might be another example. But in terms of availability schedules, of course, just keep in mind to follow your institution's EFA disclosure. Some institutions choose to place holds for less time than the reg allows, which is perfectly fine. Of course, you just can't place holds longer than the reg allows. So for new accounts, so an account is new the first 30 calendar days after it's opened, and it's opened when the first deposit is made. Okay, you get 9 business days under this exception per the reg, but again, be sure to follow your EFA disclosure if it's shorter than that. If each customer on the account already had a transaction account at least 30 calendar days old, new account does not apply, and that does include dormant accounts. So to kind of break that down a little bit, if your customer already had account 1 and opens account 2, account 2 does not qualify here under the exception unless it's like a savings or another account that doesn't fall under the definition that Brad talked about at the beginning, then it would qualify. If husband and wife are already on account 1 and wife goes and opens account 2 is not a new account because she was existing. Same kind of thing. If boy already had an account, girl already had an account, boy meets girl and they get married and open a joint account, not a new account. If the customer's account was closed for fraud or some other reason and a new one was opened to replace it, new account does not apply. It does apply if a signer on an existing business account then opens a personal account, then the personal account is a new account. Cash and electronic payments, still next day business here, and then note the threshold change, excuse me, under new accounts to the 6725. Okay, so large deposits is the easy one. If the check is 5525 or 6725 after July 1st, you can hold for large deposit. Not much else to say here. You can invoke this hold on a person no matter how their accounts are split across the institution. So for example, if Brad has his own account, an account with his kid, an account with his brother, 2 accounts with his wife, those deposits across the accounts can be aggregated and large deposit can be invoked. We've added an example here to kind of illustrate what availability looks like. So in this scenario, customer walks in on a Monday, deposits a $10,000 check. Under the current numbers, you're either making 225 available that day or on Tuesday, the next day, 275 for the upcoming threshold. Second business day is now Wednesday. You're releasing the remainder of that 5525, so 5,300 more on top of the 225. And then again, new thresholds of 275 and 6450 there. And then finally, the remainder gets released, which for large deposit, we typically see 5 to 7 business days. I believe the reg is 7 max. Okay, redeposited checks. So most redeposits occur automatically by operating staff. The whole idea of redeposited checks is that once a check is returned once, there's a risk that the same check would get returned again. However, the regulators have determined this level of risk isn't there for a check being returned for missing endorsement. So this exception cannot be applied in that case. And the same thing with when the check is post-dated. These are more to do with technical matters than they are to do with the risk associated with funds actually not being available to pay the check. Okay, so repeated overdrafts. So as the name suggests here, this can be invoked under those situations when a customer meets one of these two conditions of having been repeatedly overdrawn. So the first one shown here is when the customer was overdrawn on 6 different banking days, again, back to that term, banking days, within the previous 6 months. So that's to say if the available balance was negative or the balance would have become negative if items had not been paid instead of returned. This can be 6 different occasions, 6 banking days in a row, or any combination thereof. The second scenario, it has more to do with significant overdrafts and the increased risk associated with a larger negative balance. So because we're talking about a higher negative balance of at least 5525, it's the same scenario, except it's 2 banking days rather than 6. And again, updated threshold there on July 1st, the 6725. This does include negative balances incurred, not just because of checks, but any other type of debit. ACH, debit card, return checks, account fees, it all counts. If you're using a system that can automatically flag an account as a repeat overdraft account, of course, that's perfectly fine. You may be asked during an audit or an exam to provide statements that prove the basis for invoking repeat overdraft. So it's a good practice to periodically validate that system for accuracy. Reasonable cause to doubt collectability. So when we come across errors during our engagements looking at holds, they're often in the area of reasonable cause. We're going to get more into this in a minute, but the high level point from the reg is that reasonable cause may be invoked when the existence of facts would cause a well-grounded belief in the mind of a reasonable person. So pretty vague, as the reg sometimes can be. Reg doesn't do much here to define specifically what that means, which we'll circle back to again in a minute. Reasonable cause may not be invoked because of the class of the check or the person. So class of person is pretty obvious. You cannot support reasonable cause based on the person's skin color or something like the part of town they live in. Class of check is referring to, for example, it's a certain type of check, so like a credit card check or an insurance check. You cannot invoke reasonable cause by sheer virtue of it being a certain kind of check. Another example the reg commentary uses is you can't hold because, say, the check is drawn on a rural institution and it's a situation where you wouldn't be able to learn of non-payment before the hold would expire anyway. Reasonable cause hold notices are distinct in that you have to go beyond just saying reasonable cause on the hold notice to the customer. You have to additionally give a more detailed reason. And that leads us into the next slide. So again, while the regulation isn't crystal clear on what reasonable cause means exactly, we are provided under Model Disclosure C13 examples of when it may be invoked. And it's these statements that are probably going to be your more detailed reason recorded on the hold notice to the customer. So to kind of run through these, so receiving notice that the check is being returned unpaid. So for example, if you receive notification of a stop payment, you could apply this reasoning. If the check is processed through the Fed or a clearinghouse, you may receive a notice of return. Next bullet, having confidential information, the check may not be paid. So an example here would be you've established contact with the paying institution's fraud division, for example, and we're informed that the check will be returned. And we're going to circle back to that as well in a second. Check is drawn on an account with repeated overdrafts. So it's sometimes debated what this means, but note the language in this wording. It says that the check is drawn on an account. Okay. This is not speaking to the account the funds are being deposited into. If your customer is a repeat overdrafter, then you're invoking the repeated overdrafts exception, not reasonable cause. So this speaks to situations in which you may often see checks come through from like a certain person or a business, and their checks are often returned. So again, talking about who issued the check, not the customer receiving the check. Unable to verify endorsement of a joint payee. So just as it sounds, this might be when, for example, the check is payable to Josh and Brad, but only Brad signed it. Or if it looks like Josh may have forged Brad's signature, you might have cause to question it. This is pretty atypical. Most institutions, since a jointly held account doesn't typically need two signatures for a deposit, so we don't see that too often. Inconsistent information on checks and erasures or apparent alterations of checks. So we're kind of getting into check fraud here, which, as Brad said, we all know is sky high right now. Examples here might be if like the routing number doesn't match the institution name, or if the payer line has a name printed on the check, but the signature doesn't appear to be the same name. If ink appears to be smudged, of course, that's a red flag. Possible MIC line tampering being evident, like with weird spacing or misalignment, could indicate a counterfeit check or an alteration of a check. Okay, a few more examples from the model disclosure. So the routing number is not current. So this isn't talking about fraud, but rather this is like a stale routing number because of a merger, for example. Check is post-dated or stale dated. You can process a post-dated check under the Uniform Commercial Code unless the payer contacts you and tells you not to. So this is more likely to be invoked with a stale dated check, since stale dated checks may or may not be honored. Information from the paying institution indicates the check may not be paid. Generally, this is when you called the paying institution to verify funds and they told you the check would not clear at the time you call them. Last one here, notified the check has been lost or damaged. So let's assume every institution is clearing through the Fed. The Fed sends a notification to the institution that deposited the check that a check has been lost in processing or damaged. Therefore, the institution does not receive credit for the deposit. The institution then has to complete paperwork to the Fed and the paying institution to receive their credit. Okay, so the thing about reasonable cause that is sometimes misunderstood is that the reason you're placing the hold generally has to be supported by facts specific to that reason. Okay, so what do I mean by that? So, for example, say you're claiming to have confidential information, the check may not be paid, or information from the paying institution indicates the check may not be paid. Again, pay careful attention to the language here. The verbiage is referring to the specific check. Okay. What confidential information do you have specifically that the check will not be paid? Maybe you're aware of impending insolvency of the drawer of the check or the paying institution. We mentioned earlier a possible notice of fraud through conversation with the paying institution's fraud division. The commentaries, if kiting is suspected, the commentary in the reg does allow for confidential information to be invoked in those cases. The error we sometimes see is that reasonable cause is invoked inappropriately based on insufficient information. So a couple of examples are listed here of reasons that probably are not valid. And the first one we do see, so, for whatever reason, either you can't get a hold of the paying institution or you call to verify funds and they won't do it for whatever reason. This in and of itself is not sufficient basis to say that you have information that the check will not be paid. In that scenario, you simply cannot verify the funds. Okay. Going back to the repeated overdraft situation, we'll occasionally see reasonable cause invoked on customers that are repeatedly overdrawn. Your customer frequently being negative does not have anything to do with the particular check being deposited. So you have to tread lightly here. That probably would not fall under having information the check will be returned, because again, it goes back to what do you know about that check itself? Okay. The exception to that would be, again, if you suspect hiding. There is a record retention requirement for reasonable cause. You have to keep reasonable cause notices for 2 years, and the record has to include what your basis was for invoking reasonable cause. So if you spoke with the paying institution, document the conversation. If you suspect hiding by your customer, be prepared to support that. We recommend initialing and dating the supporting documentation, just as you might do with any other documentation that would get audited or that would be looked at during an exam. Okay, just to close it out here real quick, emergency conditions. This is pretty rare, so this is speaking to conditions that delay the processing of checks or accounts. The most likely scenario under emergency conditions is probably a power failure or a storm, which, of course, here in the Midwest, that's not unheard of. Although most institutions have contingency plans to process checks when there's a power outage, which is why we rarely see this hold. So that is what I have for you for exceptions. So if you weren't an expert on exception holds before, then maybe you are now. So with that, I'm going to hand it back to Brad to briefly talk about case-by-case holds and close us out.
All right, wonderful. Thanks, Josh. That was good stuff. And that also brings us to our next poll. And that means our next chance to win a prize. So since the next topic we'll discuss is case-by-case holds, this poll asks what is the amount of required next day availability for a case-by-case hold. And the options are $5,525, $100, $225, or $275. So go ahead and make your selection. It looks like 225 is way out in front, with 275 being a distant second. So 225 is the best answer for what currently must be made available. Come July 1st, 275 would be the right answer. $100, that's somebody who's probably been doing this as long as Brenda. You're remembering a few changes back. And then $5,525 has more to do with the exception holds and the case-by-case hold. So it looks like we had 88% with 225, which is the best answer. All had, the relevant numbers to Reg CC and were decent choices for one type of hold or another. So thank you all very much for participating in that. We'll announce the winner for this poll in just a few minutes when we wrap up. And now it's on to case-by-case holds. We're almost home. This is the final topic of the day. So let's just say that you don't feel right about a certain check deposit. Think you need to place a hold, but none of the conditions that Josh just covered for an exception hold apply. Then what? Then you can place a case-by-case hold. The good news is that you don't have to disclose why you're placing the hold, and you don't need to have a specific reason. You can just place it. The bad news is that the hold can't be placed for as long. You have the normal next day availability of 225 or 275 come July 1st, with the balance available on the second day. So if you want to read up on all the finer details of case-by-case holds, you can find those in 229.16C as in Charlie of Reg CC. As with the exception holds, you must provide the depositor with a notice at the time of deposit. And I believe we have those requirements on the next slide. And indeed we do. I love it when a plan comes together. So as you can see here, the content requirements for a case-by-case hold are a bit less onerous than those for an exception hold. The disclosure containing these 4 items, so notice that there's no reason for the hold included here, must be provided at the time of the deposit if the deposit was made in person to a bank employee. The notice can be delayed until the first business day following the banking day of the deposit if it was not made in person to a bank employee, or if the decision to place a hold was made after the time of the deposit. One other item you'll likely want to include on your case-by-case holds is a statement that the customer may be entitled to a refund of overdraft or return check fees that are assessed if the check being held is paid, and then how they can obtain that refund if the overdraft is due to the hold. Absent this language, you may not assess such a fee if the notice was not provided at the time of deposit, if the check is paid, and the overdraft would not have occurred but for the hold. So I know that's probably a lot to absorb. Hopefully you weren't taking furious notes, or you're going to get the recording and go back and listen to that to see just what I said. If you look to model form C16, and that's referenced here on the top of the slide, it will include model language for that. So just go out to that model form, look at the model language at the bottom of the hold, and see if you've got something similar to that on your hold notice. Then this final slide simply includes some pointers on case-by-case holds. First off, no case-by-case holds on items that must receive next day availability. So no holds on cash, in case you are getting any ideas on that one. My apologies there for the dad joke. Obviously, no holds on cash. As we mentioned before, the case-by-case hold can be used if you just don't have a good feeling about it, but you don't have enough to support an exception hold. Maybe you suspect fraud in your gut, but don't have anything to point to, or maybe this customer has a history of return checks, whatever it might be. This is your chance to at least put a little speed bump down in front of them. Reiterating the point here that your reason for placing the hold does not need to be included on the hold notice. And it is a little speed bump, since $225, now $275 on July 1st, must be available on the next business day, and the balance must be available on the second business day. That's not a lot of time, but it's better than nothing. So that about wraps it up for our prepared comments. Just one last word of encouragement to take this opportunity to review everything Reg CC, from your policies and procedures to your training to your marketing material, and of course to your disclosures, to make sure they're up to date, not only with the regulation, but also with the way you intend things to be done at your institution. Before we get to our final poll for the day, just a quick word about Anders for those of you who are not as familiar. We're a public accounting firm, so offer everything that comes with that, including tax work, financial statement audits, even employee benefit plan audits if you happen to be in need of one of those. Outside of that, we have an entire team dedicated to financial institutions. That's the only industry they work in, with specialties in all things deposit compliance, BSA, Josh is a CAMS and a CBAP, loan compliance, fair lending, CRA, outsourced internal audit, and that includes director's exams for those of you who don't need an audit, annual ACH audits, asset liability management, interest rate risk and liquidity reviews, outsourced loan reviews from a safety and soundness perspective, and then also IT general controls testing. So if you're interested in discussing any of those services, please don't hesitate to be in touch. All right, so thanks for sitting through that little marketing pitch. Now we'll launch our final poll for the day. and then announce the prize winners for all 3 polls. So this poll is not a multiple choice, but simply a word cloud. So please type in any topics that you'd like to see covered during future webinars. Since this is a word cloud, the most common responses show up larger, so keep it short and sweet. What is it that you'd like to see? Is it EFT error resolutions? Something to do with BSA? Perhaps fair lending? Whatever it is, just type away and hit enter. So we're seeing Reg E and CRA seem to be the leaders at this point. Appraisal independence, fair lending, denials. There's probably more than I'm going to be able to read, but there's a lot out there. So thank you very much for that. We'll keep that open for just a little bit longer to see where things end up. All right. So thank you very much for that. So here's a QR code. Go ahead and scan that, and it will take you to a booking page. If you want to book a little time to talk about anything we discussed today or any of the services we offer, and then we will I see the winner list coming through. It should be here momentarily. So it looks like we may be having trouble with getting the names off of the polls. Okay, here we go. So for the first poll, we have Angela Snell. Congratulations, Angela, from Five Star Bank. We also have for the second poll, a mini quiz on case-by-case holds. We have Rachel Gagliardi. Sorry if I didn't get the last name right. And then for the future webinar topics, we have Brooke Glass. So congratulations to Angela, Rachel, and Brooke. If I called your name, please send me an email to bstumpy@anderscpa.com, just to be sure we have a good email address to send you your Starbucks gift card. So thanks to everybody for participating, and particularly to those 3 for winning the gift cards. So if we look at the next slide, it's got phone numbers and email contact for Josh and I. If you prefer using those old-fashioned methods of reaching out to scanning the QR code, that's probably the way I'd go ahead and do it. So you've got that information there. You can always get hold of us with anything you think of down the line. All right, and then just one last time, thank you very much for attending, and be on the lookout later this spring for announcements about our second quarter webinar that's tentatively scheduled for late June. Thank you very much, and have a great day, everyone.